Good afternoon, all things Social Security. Okay, so I'm seeing two different questions when it comes to tax time, I guess because we're approaching tax day. And there's two areas of misunderstanding, I think. The question is about what part of Social Security benefits received if we are retired or disabled and receiving our benefit is going to be taxed. Some are of the notion that 100% of it will be taxed, and some are of the notion that none of it will be taxed. So neither one is true, or isn't always true. So let's just go into it. And I will link the page to the Social Security Administration's website where they explain this. But let's go to it. First of all, the majority of people that are receiving Social Security do not pay federal income taxes. Now, when it comes to state or local taxes, that's going to be your state and local rules. So we can't really address that here. And that could be very well different. But the 40% that do pay, so that's the minority, right? It's because they have income outside of their Social Security, which God bless them. That's great, right? We all hope to. We all hope to have savings or investments or retirement accounts or some other stream of income besides relying on our Social Security retirement, or if it's disability, either way. So, I mean, the other kind of income could be investments, 401k, interest, wages if you're working, or if a spouse is working and you're joint. Self-employment, same idea. Any other income that would be taxable. So they have this thing called combined income, and I'll get to that definition in a second. I will also tell you how you can maybe avoid being surprised with taxes if that's a concern that you may owe taxes on your Social Security and have to come up with the money. But in the meantime, if you're an individual filing individually, meaning for tax purposes with the IRS, and your combined income is under 25,000. So when you take your Social Security benefits and when I get to the definition of combined income, you'll see it's a little interesting. But if whatever is the amount they count from your Social Security payments, which is not the whole thing, so that's an important note, and any other taxable income you have, if that is under 25,000, your Social Security benefits will not be taxed at all by the feds. Okay. If it is at least, if it's somewhere between 25,000, so it's not below it, but at 25,000 and up to 34,000, you may be paying income tax on half of your Social Security benefits. Up to 50% may be taxed. The other 50% will not be taxed by the federal government. Just as a little add-on, that 25% to 34,000 bit where you can get taxed and being under 25, no taxation, those numbers have not changed in as long as I can remember. I know I babble about this all the time, but when COLA applies to some things and doesn't apply to something like this, what does that tell you? That means that they are surreptitiously taxing more and more and more of the Social Security benefits just by the mere fact that there's inflation that they are not addressing. So, the more COLA you get applied to have a bigger benefit every year, everyone gets all excited in the fall when the COLA number comes out. Those your tax is going to be raised. The fact that more portions of your benefits will be taxed, not just the fact that there will be more taxes. Now, if you're going back to it as an individual, if your combined income for all those different ways you get income other than Social Security are more than the 34,000, you can be taxed. Your Social Security benefits can be taxed at least up to 85% of them, of your Social Security receipts can be taxed up to 85%. So there might be a gradual staggering. It'll be more than the 50, but less than the 85, right? And that's it as you get 34,000 and higher in your combined income. If you are filing a joint return, the whole same idea applies, except the numbers are a little different. Instead of being, if you're under 25, you don't pay tax on your Social Security benefits, it goes up to a whopping 32,000. Woo! You get to keep another 7,000 tax-free of your Social Security benefits. And the cap on that, where you could be charged up to 50% of your Social Security benefits, would be the 44,000 instead of the 34,000. So 32 to 44, you can be taxed, or 50% of your Social Security can be taxed. Under 32,000, none of it will be taxed. If your combined income as a jointly filing couple is more than the 44,000, just like the individual at the 34,000, you could pay somewhere up to 35. Your Social Security can be taxed at a rate up to 85%, depending on where your tax bracket, I presume, will fall. They do go on to tell us that if you're married but you're filing separately, you will probably pay taxes on your benefits. Okay. All right, so let's look at combined income. And again, I'm going to put the button up towards the end, and you can go right to this page and see it written out in an equation that you can use. You take your AGI, adjusted gross income, from your tax return. You add any non-taxable interest to that. So now it's going to be a little bigger, potentially, than your AGI. And this is how we're going to find out what our combined income is. And then you add a number for your Social Security benefits that you get. But the really important thing to know that saves so many people, so many, 50% of your Social Security benefits is not counted towards the combined income. So if you're getting 30,000 a year from Social Security, only 15 gets counted here. So you could feasibly, of course, not be paying any taxes because your combined income still isn't going to hit that 25,000 as a single person or 32,000 as a married couple, because fortunately the entire wad of Social Security is not counted when determining the combined income. The thing I wanted to suggest, and I probably wouldn't do this if I definitely have no other income than Social Security. But if you do have other income from Social Security, and Social Security is going to be taxed later on, and you're not doing this, you're going to have to come up out of pocket and pay for it at that time, potentially. So you can consider having federal taxes withheld from your Social Security benefits each month you're paid, the same way you do it with, an employer. So consider doing that. That's the, I'm going to find out the name of the form. Is that the the W-4. It's that voluntary withholding request. And we fill them out for a bunch of reasons. And this is a good one too. Again, if I was only getting Social Security, I don't think I would do it because the chance of anything being taxed, I just don't think it would happen. But if I do have other income, and hopefully by the time I get there, I will have other income. Other income that's not working income, hopefully. Not that I don't plan on working, but I would like there to be other savings or retirement. I just hope. Let's see how this economy goes, right? Okay, so yeah, W-4. I'll link you to both of these. Actually, I'll try to put them both up. Or if you go to the first one, they do have a down at the bottom. It shows you how to get to download the W-4 form from the IRS, and you fill that out and you give it to the Social Security Administration, and they will start to withhold for your federal income tax needs later. And of course, like anything else, if it ends up being that they withhold more than you needed to pay, you're going to get a refund. So granted, you're not earning interest on that money withheld while they're holding on to it. But for those that are concerned about having a bill at the end of the year, sometimes foregoing that interest that you probably wouldn't be saving anyway in a high interest savings account, it's nice to have that sent back to you at, after tax time. So All right, that's enough of that, guys. It's tax time. I haven't finished mine. I don't know about you. I am working on them. I just don't like to do too much of it at one time because it's very irritating, to say the least. I'll talk to you later. Bye.